Good morning, everyone. Nice to see you all. I hope you are feeling good on this day. As always, we are building bridges on a pan-Baltic level with Jekaterina this morning. And I am always waiting for this meeting myself because instead of reading different economic reviews, I always expect this chat and meeting with Jekaterina to sort of get us all on the same page of what's going on. And for the past meetings, it was always some turbulence. It's always some turbulence. So I am looking forward to hear what's going on right now. So Baltic countries facing headwinds, finding tailwinds. Let's see how this is going to go. Jekaterina, good morning.
Morning. Thank you, Yeva.
How are you today?
Well, it's spring finally is coming, so I hope that the same expectations will be also covered by our economies.
Are you ready to bring on some news?
Yeah, absolutely. And we will talk about bad news and good news, kind of a mixture. And you were absolutely right talking about the turbulences. It seems that turbulences is a kind of a new normal, not only for the Baltics, but for the whole world. And definitely, there are some headwinds that we will be talking about in more details, but hopefully there will be some supporting winds coming from our back.
I have a feeling that on this sunny day, we will come out of this meeting with some more positive attitude, won't we?
Yeah,
can you give us a little hint?
It's most probably the question of more attitude rather than economic reality. Unfortunately, economic reality brings us surprises and not always the best ones. But
okay.
Well, we'll try to balance bad news and good news, looking for, well, remaining kind of optimistic and looking forward.
All right. So I guess that's where the balance comes in. I am an optimist. You are a realist. So let's see. Let's see what's on the plate today. The stage is yours, and I hope everyone will enjoy this time with us this morning.
Great. Thank you, Yeva, once again. So indeed, we are talking about the Baltic countries, but Baltic countries are not isolated island. When talking about the Baltics, we definitely have to cover the economic environment from the global economy and from the regional perspectives. And unfortunately, while we should state that the global economic recovery was kind of experiencing some headwinds because it was kind of a broader-based problems, broader-based slowdown, and also sharper than anticipated slowdown in most of the regions. Nonetheless, again, trying to balance in the good and the bad news. Some of the institutions, and especially, well, IMF, just recently they posted a little bit better forecast for the global economy, while remaining kind of skeptical about the Eurozone and European continent as a whole. And we see from the regional perspectives that, while 2023 will not bring us extremely good supporting results from the economy, and while the euro area will sustain some growth, but it will be quite low. Well, Germany will be on the brink of recession, balancing roughly about zero, or just a little bit below that by the end of the year. United Kingdom also is facing quite a lot of challenges, Well, the United States is the larger part of the global economy that will sustain growth. Well, again, in both 2003 and 2024, the growth is expected to be much lower than previously. Well, developing countries, some kind of a regaining momentum, so that the world economy would experience a little bit of recovery growth-wise by 2024. But again, there are so many different winds coming from the left and the right, that it is quite often that the prospects could differ and could change very drastically and very often. So when we talk about the economy as well, we usually try to gather some kind of forward-looking indicators that mainly are based on the expectations. And when talking about expectations and sentiments on both United States and European Union, Euro area, unfortunately, both those indicators are pointing towards larger recession. You've seen previously the forecast for the whole year. So hopefully this recession will be mostly concentrated in the first half of 2023. More optimism by the year end. Nonetheless, current trends, both stemming from United States and also from Germany, suggesting that the economy will be still in contraction. And also, it's not coming only from the manufacturing sector, which was mainly hit and broadly hit by in many countries, but also from the service sector that shows extremely slow growth. Since it was supposed to be one of the key drivers or key retainers of growth rates for the world economy, and especially for the United States, where services comprise roughly about 3/4 of the economy. So this again suggests that currently in the first and the second quarter, the economy will be experiencing some further lagging behind. And reasons behind that are mainly concentrated on the so-called cost living crisis. Because of the high inflation, well, first energy crisis that now we can, when the spring evolves, we can firmly say that we overcame that quite well, not only European Union but worldwide. However, despite energy prices has slowed down and there was not such a long-term expected inflation stemming from the energy prices, the core inflation, that is without food and without the energy, remains quite high in almost all the countries. And here on this chart, you can see the core inflation in 2023 is expected to be even higher than last year in Euro area. And that definitely correlates with the decisions of the central banks whether to rise or not to rise for the interest rates. And but despite the core inflation or lower the headline inflation, the overall the total price increases will be following the diminishing trend. So inflation is slowing down. However, it still will be much higher than the target interval for both into 2023 and also next year. And that again creates more pressure for the central banks to find to find this balance between stricter and tighter monetary policy, and also keeping the economy belly down. So, and here you also see that the core inflation is rising, even in Japan, which was experiencing deflation for a quite a period of time, and they are trying to sustain looser monetary policy currently. But in United Kingdom and United States and also European Euro area countries, all are experiencing core inflation. Is still high and making devastating effect on some household, especially with a lower income. And definitely, this creates kind of a puzzle for the central banks. What should they do? We are pretty much back to the future, remembering the times when the interest rates were high, and that was before 2008, when the Lehman Brothers filed for bankruptcy, and then most of the countries saw abrupt drop in key interest rates, creating an absolutely different environment for living, borrowing, and crediting. Currently, we see that the key policy rates are rising and rising quite quickly, quite aggressively, and despite the signs of reduction in growth rates are coming and stemming from most of the regions. So, and again, in these positions, since the core inflation remains high and will be most probably will be higher for several years, that again creates pressure for the central banks not to end the interest rate hikes very soon. And that means quite a lot of changes for the households and the businesses in the upcoming several years. Especially, it might create some kind of diversity between the countries, and even between different category of households. As higher interest rates actually create more diversity in the economy for among the consumers, but also not to forget the higher discrepancies and differences among the countries. And most of the bankruptcies in European Union are coming now for the from the countries with a higher debt. Such as Spain and Portugal, Greece, so so-called PIGS countries that were involved in and couldn't get rid of the higher debt ratios, debt to GDP ratios. They are falling through the rock currently. So that's the overall result of this steep and aggressive monetary policy that the central banks are now pursuing will be seen most probably only next year. From the good side, well, definitely can say that the global supply chain that was kind of a persistent problem for quite a period of time now is not a problem anymore. And well, with the stop of the COVID policies in China, many blockages have been removed, and the prices for transportation has been declining for a number of quarters already. And currently, we can say that we are standing pretty much on the long-term trend for the global supply chain pressure. So it is a kind of back to new normal. And that's good for manufacturing and for the whole chain through the very beginning until the final consumer. with only but that the consumer have to consume and have to overcome this cost of living crisis that some of them have already stepped in. From there, well, on the other hand, from the worse side, we still see that the economic policy uncertainty prevails, and uncertainty overall is on a higher trend. It is rising constantly, and as Yeva mentioned, we are living through the turbulence time. So we are always living through some turbulence times, but the economic policy recently provides kind of unprecedentedly high fluctuations about the uncertainties. So definitely we can state that it is very widespread and touches most of the countries. Because there are kind of tectonic changes on this living platform, and unfortunately, neither households nor the companies can feel very secured and certain for the future. So what we can be certain about that interest rate will be rising, inflation will be still quite high, at least by the end of the year, even being on the downward slope. And that definitely will put additional pressure on credit market and on overall investments and on higher risks. That would create the higher risks for different sectors and even different regions. And well, recently, if we take a look on the key drivers behind those uncertainties, we started from the trade tensions between United States and China, and then it was Brexit with the very clear peak and spike over here, and then we moved toward the coronavirus pandemics, and finally, one of the key reasons for the higher uncertainty globally, and especially in the European Union, is a war in Ukraine that is not only devastating effect for the Ukraine itself, but also for the economy in both ways, for the trade and for the migration and for many other aspects. And so this uncertainty definitely creates quite a lot of obstacles for the economy to go back on the growth pace. And well, one more indicator that shows that uncertainty for the Baltic countries will remain high as it is globally, and which is again connected with Russia's invasion to Ukraine, is so-called iconic doomsday clock, which now hits the unprecedented close to 12 o'clock, which is the doom time. And it gathers several factors behind that, all the talks and speculations about the nuclear weapons, and well, with those speculations, there come in some actions and leaders, country leaders such as China and Russia and the United States and other countries are pursuing kind of nuclear weapons modernization programs. It also has brought, with the energy crisis, problems to or drawbacks stemming from the climate crisis, because many positive trends have been reversed during this winter, and many solutions have been used that are not as well complementary to the climate battling the climate crisis. Of course, the bio threats again, a lot of speculations on that side. Also, in the context of the Russia and Ukraine war, and kind of total government control for the information ecosystem creates more speculations about the bio threats, and overall disruptive overall disinformation also adds to this overall uncertainty and feeling that, well, something bad might happen quite quickly, which definitely doesn't support growth worldwide and region-wide. On the more benevolent side of the situation, we can still see that Baltics are quite resilient, quite resistant through the as an economies, which are quite connected with the main partners who was directly or indirectly hit by the current negative factors. And but despite this resilience, unfortunately, the prospects for the Baltics for this year and also for the next year might be very subdued. And well, Baltic countries have entered by the end of the 2022 into the minus zone, the red zone for the growth terms, and or at least balancing as Latvia on the very edge of that. So for 2023, there is no very bright prospects for neither of the Baltic countries, but on the brighter side, we definitely do not see macroeconomic factors that would suggest very sharp recession in any of the Baltic countries. So all three countries, and Estonia and Latvia and Lithuania, they will be most probably on the negative side, or just a little bit above the zero. But not on the depression or very sharp recession. We also see that the structural reforms and all the efforts that have been put recently over a decade, last decade, in the Baltic countries start to pay off, and overall standards of living are increasing in all the three Baltic countries. Lithuania, by the most recent calculations by the GDP per capita in purchasing parity standards, has hit already in 90% of European average. Estonia falling very close to that. Latvia is falling a little bit behind, but nonetheless, all the three Baltic countries do report a very nice progress in standards of living. While the price pressure remains high for this year, but still will be creating some room for further expansion. And if we take a look on the last decade, so by the same parameter, the Baltics were among the top catch-uppers in the EU. They were the fastest to close and to bridge the gap between the EU standard, EU average, and the starting points that they were finding themselves in 2012. And here we see that definitely one of the first and the only great leader was Ireland, because of the huge investments that the country was able to attract. Romania also posted a very nice result. Lithuania is standing quite close to that, but we also see that quite a lot of old timers in European Union actually were not gaining, but were losing standards of living over the last decade. And among those, even Slovakia, which was which is comparable to the most of the countries of the newer bloc, has been also falling behind. With a little bit improvement on the world prospects, it's good to see that economic sentiment indicators also seem to hit the ground already and start improving in all three Baltic countries. And the same very but a small improvement has been recorded also in euro areas. So that means that overall expectations on the markets at least start stabilizing. And one of the reasons of that is definitely the drop in inflation. And as we already mentioned, as it was already mentioned, despite the overall inflation in Eurozone or in any other countries within the Eurozone has this very similar pattern. The headline inflation was decline. Unfortunately, food inflation is still on a rise, and not only core inflation is increasing, but food inflation, which is a part of the most important part for the lower income households, is creating more barriers for better living in some countries for specific categories of people. So. Again, economic sentiments and consumer confidence could be split and could be quite divided on that. But again, here you would take a closer look on the Baltic inflation. So Baltic inflation still remains quite high and quite damaging for global standards, and one of the highest over the last 20 years, but the declining trend looks promising. Definitely, the current growth, neither the current growth of the economy nor the current growth of salaries can compensate this rate of inflation, but hopefully this gap would be short-lived and will be narrowing by the end of this year already. So with the consumer confidence indicator, again, a similar situation as with the overall sentiments. Consumer confidence indicators start finding the growth path. Very clearly in all three Baltic countries and also in the euro area, and this also looks more promising in for the second quarter of this year and the third quarter of this year. Of course, one of the key criteria is what will be happening for the credit market. On the good side, we can see that during the last decade, all three Baltic countries have even decreased the dependency on the debts. And Estonia, that used to have roughly about 70% of private sector debt to GDP ratio, has reduced it to below 60. In Lithuania, it stays at the very comfort zone of roughly 36%, and Latvia has drastically cut their private sector debt. So compared to the other Euro area countries, all three Baltic states are ready to be financed more and ready to invest in both from both sides, from the companies, and also households are not indebted extremely hard, as we know the situation is in Spain or Greece. So in that sense, it also means that the rebound when the sentiments reverse will be much higher compared to the other countries. So this negative effect of the higher inflation might be compensated even with a shorter period of time compared to the other European countries. But for the moment, of course, the interest rate hikes for different categories remains quite problematic for both for households who already own credits, and also for those households that were planning to acquire new credits, say for mortgage or even for consumer loan. Interest rate for mortgage has increased quite drastically by more than 2 times in a very short period of time. That creates quite a lag on the overall real estate market for all the 3 Baltic countries. And regarding the consumer loans, here, well, the interest rates are also rising, but not at a such speed as the other categories because of the initially high interest rate for this category of loans. On the other hand, we also see that demand for the consumer loans has increased due to higher inflation and due to this trying to meet ends from different households. So this also creates higher pressure on the markets, and we will show you a little bit later on the example of Lithuania for that. But overall, loans to households still report the growth. And here you can see that the growth rate is a little bit smaller and slower than previously, so it's declining. However, it's still growing in all 3 Baltic countries, and Euro area has a much narrower interval of growth, so it grows in more stable way. But nonetheless, the Baltic households are expanding their portfolio and living more for the future's sake. So if we take a look on the company side, so here we can see all very similar situation, and interest rates for loans for non-financial corporation has been on the rise and rose, nearly doubled since mid 2022, which is very abrupt increase, especially knowing that availability of finance for the SMEs remains a problem for very small companies. So since the banking sector will still be forced to balance their risks, most probably, well, this will not be easier for the SME sector to obtain credit, even at a higher rate. So this pressure stemming from both availability of credit and higher cost of credit will be putting some drag on the overall growth and overall investments for many businesses. And we also see that in Lithuania and Latvia, the growth rates of loan portfolio for non-financial corporation has slowed down, but in Estonia it is still on a rise, and increasing quite nicely. And on all three Baltic countries still demonstrate higher growth rates compared to euro area, which stands now about 5%. So overall effect on the businesses was kind of subdued, apart from the bankruptcies. And as it was already mentioned, well, for the eurozone, for the European Union, most of the bankruptcies are coming from the indebted countries, such as Spain. And despite registration of new businesses, which was on the rise for a longer period of time, kind of stabilized and are not showing very nice increases, but the bankruptcy ratios and the number of new declarations of bankruptcies is skyrocketing for the eurozone at the moment. And also we can see from the different sector perspectives that some of the sectors appear to be more riskier than others, such as transportation and storages, and also accommodation and food services. For the European Union, another sector that's been more riskier recently was education, health, and social activities, while trades been on the rise, but have been below the overall trend. In the Baltic countries, well, some of the sectors just replicate the same risk pattern, and we can mention transport and accommodation and food services. Some of the sectors might also see a rise in risks because of the short-term price decreases or price changes, such as agriculture, for instance. And this might also create some additional pressure on the bankruptcies of companies. As an example, you see the number of bankruptcies in Lithuania, and the overall number of bankruptcies in Lithuania has shrunk compared to the same period of time for the first quarter compared to the same period of time last year. Most of them are stemming from similar sectors, such as hotels and restaurants. Also, the trade sectors, internal trade, manufacturing also became quite active in newly registered bankruptcies. On the other hand, well, most of the companies that are filing bankruptcies are devastated. Part of these companies are very small companies, with only 5% of total number stemming for the small companies, that is up to 50 employees. and a very small amount on the medium or large companies. So this again shows that well, the kind of clearing up of the market is happening currently. But in Lithuania, the record low number of bankruptcies was registered in February, but it again showed some increase in March, and April most probably will not be as positive as previously. Regarding the sectors, here there is a ratio of risk bankruptcy ratios of separate sectors compared to the risk ratios of the bankruptcy ratios of the overall economy. So that means that in accommodation and restaurants, the relative number of bankruptcies is 3 times higher than on average in Lithuanian economy. In construction, it is 2.3 times higher. Like water supply and manufacturing is also higher compared to the average, but to a less extent. And transportation saw most probably its worst time last year, when most of the companies just picked bankruptcies were concentrated specifically in the transportation sector. Now the smallest companies either get adapted to the new reality, or overcame, or well, unfortunately went bankrupt already. So now there are in this year most probably the transportation won't be the key anti-leader for the number of bankruptcies. And well, the overall demographics of bankruptcies varies among the countries, and overall bankruptcy ratios were very much on the rise in Euro area, kind of subdued in Lithuania, but Latvia and Estonia, well, Estonia was the country that accumulated most of the bankruptcies in the very first years of coronavirus. And here, well, the differences between the economic policy decisions that have been made and facing these headwinds from the very beginning. The looser fiscal policy and more benevolent fiscal policy that was obtained in the other countries helped to postpone this bankruptcy increase for some period of time. But now again, even that time has come to an end. And overall, you see that the registration of new companies has start to slow down a little bit compared to the pre-pandemic times. So that means the overall activity on the market is not as well, hasn't yet returned to the normal pace. And of course, while the consumer uncertainty declines, the concerns about the future employment prevails in many countries, and overall European Union shows that unemployment expectations are on the rise. Here, the Baltic states, the Baltic countries are in a kind of safe haven because the labor market remains strong, with unemployment rate well, fluctuating a little bit, especially in Lithuania, but still remains on the lower side, and there is not so much bad news coming, at least from this area. But for the eurozone, for the specific countries, the unemployment expectations and rise in unemployment might create quite a lot of problems and kind of chain effect, hitting further the cost of living for households. As already mentioned, that consumer loans were extremely active in the area of higher inflation and in the environment of the higher inflation. And together with the increase in consumer loans, some kind of increase in debts has already been realized after 3-4 months. If we compare the situation, the current situation on the debtors with the situation of the mid 2022, there are sectors that have been facing a decreasing number of debtors and overall decrease sum in debts. For instance, in telecommunication sectors, part of the mail debtors has decreased. Usually is the highest part of the open debt amounts. And also, interestingly, that the largest decrease in overall debt amount was indicated in the first category among the youngsters. So the youngsters were able to acquire phones and other telecommunication devices without falling into the higher debt. Lower in Lithuania, we see the kind of different trends with the female overall debt has decreased in the last 9 months, while the male debtors, both the sums and definitely the proportion of this demographic cohort has increased. And the highest increase was in 2 categories, kind of on the very edge of increases. Most increases were stemming again from the consumer loans, and the most popular increase in debtors age was from 25 to 35 and from 55 to 65. So those categories are much safer for most means of financing, because these are the age ranges that do accumulate and provide a high increase in salaries statistically. And if we take a look on the kind of business and individual debt characteristics, so overall, from the Creditinfo Lithuania database, we see an increase in B2C debts and decrease in B2B. With both decrease in amount per debtor and also amount per claim from the business sector, but with these higher risks stemming from the consumer loans. Both the sums per debtor and per claim has increased, and overall number of B2C debtors has also been on the rise quite recently. So this creates quite a lot of pressure for the partners and clients, for the banks and FI companies to monitor their clients very frequently. And we also see that during the first quarter of this year compared to the same periods last year, the number of inquiries on companies in banks has increased by more than 10%, and on the MFI sectors has increased by more than 1/3. And on the consumers, we see a kind of drop for the inquiries for the consumers from the bank side, and that correlates very nicely with the slower developments in the real estate market, and mortgage market became much flatter. While higher inflation required and propelled number of interest in consumer credits, so the quarterly increase in consumers increase was already indicated this year, and was increasing also in previous years. And finally, well, talking about the headwinds, or the possible slowdown in one of the important parts of the industry is manufacturing. Well, all three Baltic countries do indicate that they are underutilizing capacities in manufacturing currently. And just a year ago, the utilization ratio was much closer to Euro area's average, was even higher than 80%, while it has declined quite abruptly in all three countries, with again Lithuania, where manufacturing is accumulating roughly 1/5 of GDP. Those underutilization might be hurting the economy for several quarters at least, until the trade partners and export markets will stabilize. So summing up, and talking about the headwinds, well, definitely the industrial sectors and the losing momentum might create additional negative pressure on the exports and on the growth perspective for three Baltic countries. From the households and the credit market and the cost of living situation. So cost of living might be depressed for specific categories, or well, specifically lower income households, and saving ratios that has been rising, and during the pandemic period of time might decline marginally because of spending part of the savings. And well, the financial conditions from tightening interest rates, increasing interest rate, and also higher risks coming from both companies and households may also create kind of a negative effect on the both the residential markets and investment real estate. So overall sectoral risks and differences between how sectors are doing, whether they're doing well or they face more headwinds, will be increasing, and those differences will become more apparent. On the tailwind side, well, definitely, we need to state that the Baltic countries are resilient because of the private consumption, and private consumption is expected to strengthen gradually by the end of this year. And well, the resilient banking sector adds to overall growth perspectives, and resuming growth after the sentiments will stabilize or try to find their upward trend. Labor market will support private consumption and will stay put. And the good news are coming from the trade sectors, that the trade partners again are expected to rebound. However, this rebound will be postponed by 2024. So overall, the Baltic countries will be struggling through this year, but by the end of the year, we very much hope that there will be no extra unexpected turbulences coming from the overall global environment that would create more benevolent environment for the Baltics to sustain growth and to risks lower in most of the sectors. And by that, I believe that this is the end.
For you, Jekaterina, I have 3 questions ready for you.
Sure.
And thanks so much for this outline. Okay, so headwinds, tailwinds. We have some pilots around us that are, driving their business forward, and it seems that prospects are more or less not so bright, but as you mentioned, the consumer uncertainty has decreased, and this is a good news. So we can be unhappy about it. We can be happy about that consumer aspect.
Cautious about that, yeah.
Yeah, exactly. Cautious about that. But it's important to be, resilient at least. So for business and for consumers, what would be your, let's say, top recommendations to build that resilience as a business and as a person?
Remain cautious for both, actually. We're very much looking for the new financial statements for the last year that should be coming. But again, even with the upload of new financial statements, most of the companies will be still facing unprecedented changes in their environment. So stay cautious. That would mean that again, every company have to weigh their risks, which might be connected both with the trade partners or export markets or global environment. And of course, it would be difficult to withstand global crisis if it comes, and I very much hope that it won't, at least in upcoming several quarters. But for the companies, well, staying optimistic but being cautious at the same time will be the best solution for the current period of time. Regarding the households, well, here most probably the optimism there will be less optimism on the household side, especially again because of this divergency and discrepancies among the different categories of households. And from what we see, well, even inflation that will be declining and is declining currently, it is much higher currently for the low incomers. If average inflation stays at 15%, roughly about 15% currently for the whole economy and for the whole households, for those who are salary is below the average, the perception of inflation is at least staying higher than 20%, from 22 to 24% on average. So it is still very, very high, and that's why, well, what we see from the consumer loan trends, definitely households should be very cautious on acquiring new goods and new services, because it won't be easy to bridge in the gaps with the new finance in the higher and rising interest rate environment. So by that, I believe that well, there won't be kind of total devastation on the real estate market, but the real estate market will be mostly driven by need, but not by investments opportunities, and for at least from the household side.
All right, Thanks, Jekaterina. One more question. You talked about sectors that are, so to speak, in danger, and we always have the usual suspects. Construction, transport, manufacturing. Well, Horeca. Is there anything unusual happening there? Well, it's always those four.
Well, quite unusual is to see the rise in risk of agriculture, and definitely it is also interconnected with the invasion of Russia into Ukraine, and the total turbulences on the export market of goods. But again, this most probably will be a short-lived effect, which, with the support of the government or with some, well, maybe unpleasant decisions by the agricultural, by the farmers, would be creating this possibility to overcome this short-lived problems. But again, in many countries where the agricultural sector is higher and is important for the economy, that might create an additional turbulence and additional social unrest, even together with the quite difficult situation with the cost of living. So the agriculture most probably is another sector that might bring more surprises. Regarding the accommodation and food services, again, I hope that the worst is already behind us here, and well, people are still and increasingly traveling. And despite the number of flights is still below the pre-pandemic rates, roughly about 20% below. But this gap is decreasing, and that means that, well, to a slower path, but we are trying to find this path to return to the situation that was before the largest uncertainty factors that are prevailing currently.
Right, and my last question, like all in all, in one sentence, in the Baltics, fastest catch-uppers, in general, how are we doing?
We're doing okay. I believe that we're doing okay, evaluating the overall pressures and headwinds stemming from all the sides and all the neighboring problems. Again, there might be some differences between the countries, despite the factors that are pushing us are very similar. But nonetheless, I believe that the result of the growth for the three Baltic countries will be a little bit less than expected. That might have been expected previously, but again, it won't be devastating this year. So we need to prepare for a leapfrog jump for the next year.
Thanks, Jekaterina, for this. I noted down that we are doing okay. So if anybody at lunch asks, so, you met Jekaterina in the morning, so how we are doing as an economy, I would say, like she said, we are okay. So, that brings some peace to it. Jekaterina, thank you so much for this meeting, and I wish a wonderful day for everybody. We are doing okay. So have a good day, have a good time, and see you next.
Thank you very much.
Thanks, bye.